Let's connect with Geoff Dennis as well, independent emerging markets commentator. Thank you so much for joining in. And I guess one of the big talking points is what's happening in China. There have been so many fresh stimulus measures that have been announced, but all have really failed to enthuse investors. 5 that have been announced, and I believe on Saturday there's going to be a 6th. And that too is expected or touted to be a disappointment. How have you read into all this for China?
Well, my view all along, since they first announced the big package of monetary policy changes, was that the monetary policy changes alone were not going to do the job of really pushing the economy to stronger growth. I felt that you need to see some fiscal action. We've seen promises that fiscal action will come. We just haven't seen the details yet. And I think what the market is doing now is waiting for those details. Are we going to get some significant fiscal action, in other words? Because the issue of the Chinese economy here is weak consumer spending, weak consumer confidence, and of course, a very, very soft property market. To get the consumer going again, you need, I think, fiscal action. You don't just need a string of monetary policy actions. And therefore, I'm going to remain very skeptical about this rebound in equities until such time as you see some more significant action on the fiscal side.
Has the China trade reversed, Geoff? Do you think that was more like a dead cat bounce, and are we nearing the end of the China bounce trade?
I mean, it's certainly been it's been an impressive bounce. There's no doubt about that. It's almost hard to call a dead cat bounce. It's a question really whether it's a false dawn. I think that would be a better analysis. I mean, what it's done, the rally in China is powered the EM index up sharply over the last towards the end of September. It's pulled back a little bit again in early October. I think the point is now that it's a show me story. I would not chase the Chinese market here until I saw more evidence, as I say, of fiscal action, which is going to propel consumer spending higher. At this point in time, it's very difficult, I think, to be convinced that they will hit their 5% growth target. And therefore, I think investors will be very skeptical about chasing this until you see some more significant action, which is really going to sort the problems of the Chinese economy out, which, as I say, is 1, the consumer, and 2, the property market.
Do you see India coming back, or it is going to be China for next couple of months?
I wrote about was this the big rotation from India into China in late September when this first began to happen. I don't think this is the big rotation, frankly. I think the China move is understandable, but I think it's relatively limited. And I think the better long-term story in almost every sense is the India story. And I've said this for a long time. Right, we all know what the challenge in India is, which is delivering sufficient earnings growth to justify the valuation story. But still, over the long haul, I think with the potential before too long, hopefully, for interest rates to be cut, perhaps with the growth of the economy around the 7% range, and I think under much less risk than is the case with China. I think once the Chinese bubble or rally here, short-term rally, blows itself out, which may be happening now, I think there will be renewed interest again in China. Now, if China does something very significant on the fiscal side, people will focus back on China. But at the end of the day, the better long-term story, without any question, despite high valuations, is, in my opinion, India.
Right. Geoff, so great having you on the show. Thank you for taking the time out and speaking with us.
Thank you very much.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.